Hello everyone and welcome to a new ATFX video. This one is one of the big important videos we are doing because in this occasion we're gonna analyze one of the biggest companies in the world and in a very delicate and special sector, which is the technological sector in the United States. We're talking about Nvidia, we're talking about the earning results, the report that is about to get released by the company, and that's why we decided to make a special report on that specific company. So pay attention because we're going to give you not only the fundamental aspects, the numbers, and also the main challenge and projects of the company, also the technical analysis with the projections on the price, really interesting this occasion. And before we go into details, please let me remind you, if you are not subscribed to this channel, you should, because then you're going to get update. And especially if you click on the bell to receive updates, notifications anytime we upload a new financial market report. Let's go to the topic and let's analyze this in detail. Let me go to the presentation I have prepared for you to give you all details. Now, first thing, expectations, simple, between 65 to 60 billions on revenue in the company and an EPS of $52 per share. I believe it's around 70% year over year, the revenue compared with the last period, right? But the most interesting thing here is the gross margin. The gross margin is between 73 to 74, 75%, which means like mainly 3/4 of the total revenue is free to invest in whatever they want or even to give back to the shareholder, which is massive margin, massive gross margin for a company of this nature. Now, the main concern we should pay attention on in terms of Nvidia is that the expectations from these 63, 65 billions, 51 only are coming from data centers. And again, the main concern of the investors right now in the United States is if in the technological sector is growing a bubble. If that's the case, the massive investment done in data centers could, by any reason, goes wrong in the future, it's gonna cause a massive hit on companies like this. 51 billions of income, of earning, are coming from data centers. Now, a margin part is coming from gaming industry, which is 4.3 billions, and we also have two different business lines that are in a very early stage. One of them is automotive and robotics, very similar to Tesla projects, robotaxis, self-driving system, androids, and so on. But again, in the case of Nvidia, it's in a very early stage. We also have a software and services, which is CUDA, DGX, Cloud, and Omniverse, again in a very early stage. Something else, yes, driven by the premium pricing, still Nvidia is leading the world, leading this sector, this industry, and therefore they are getting really good days by the premium of the microprocessors they are selling, the prices on premium, the prices of the technology they are distributing around the world, right? Nvidia secures capacity via TSMC and leading memory suppliers. This is another key factor, and still, in my opinion, this is also a risk. They say the relation between TSMC and Nvidia guarantee the supply still could mean that if something happens in the future between Taiwan, China, and United States, could affect that main strategic partnership to guarantee the supply. Now, I want you to pay attention from all of these factors. The most important one, and the one we didn't mention yet, is the 500 billions on order backlog on Blackwell and Proven AI. Because 500 millions on the pipeline for business is something we probably need to review. It's something we are expecting to see in the coming earning report. We want to see if they give us an update or a revision on the 500 billions of business on the pipeline that Nvidia has, because it's a massive big number, and therefore we depends on that number. If by any chance Nvidia consider that from those 500 billions, the things are not going in the same way they were expecting, and therefore it's not 500 anymore, it's maybe 350 or maybe 700, we don't know yet, right? But we want an update on the order backlog for the 500 billions of business they have in the pipeline. We want to see if those numbers are still there. Royal Bank of Canada and other investment firms are also expecting a modest beat and rise report. That means they're expecting they're going to beat expectations and rise in the price. However, we are facing different scenarios, especially when you will see The technical analysis report, you understand what I mean, but the patterns on the charts is pointing in a different direction. Now, one positive aspect is the 60 billion share buyback authorization, because that means if the company is happy to buy 60 billions back of the stocks, it means that the EPS naturally will grow in the future in the next reports, and therefore it will attract more investors to jump into the company by a more attractive EPS. Now, growth drivers and key risk, we have hyperscale of AI spend, which is, again, in my opinion, is a risky factor because it's 3.3 to 4 trillions of investment in data centers by the end of the decade, and it's a massive number. This volume of investment is shocking, right? We never have seen 4 trillion of investment in a company, in a sector, and this is what Nvidia is doing. This is the technological sector in the United States, and therefore this is the risk of a bubble. If anything goes wrong with this massive investment, it could cause a massive hit to our companies of this nature. Chief roadmap leadership, we still have a consistent leadership. As I mentioned, we got Hooper, H200, Blackwell technology, Robin AI platforms, delivery consistent performance. Is still leading the company. Is still the sector is still doing really well in terms of performance, and therefore is the main supply of this kind of technology. Software mode, we got customer lock-in, creating durable, high margin, recurring revenue. So therefore, they still remain in that closed circuit business we mentioned in the past, which is holding the main business with Amazon, with Google, and with Microsoft, providing them with microprocessor, microchips, and CPU. CapEx slowdown. Any pullback by hyperscale could cool demand sharply, which is a bad factor, right? Still, the competition is hard. We got AMD and Intel fighting hard to also improve the technology. Therefore, it's a threat. And in my opinion, the third one is the key one: geopolitical and export risk, especially after we have seen with the Supreme Court, United States, and the tariffs of Donald Trump, and Trump imposing a 15% on the top, new tariffs, and so on. Any factor that could modify the trade relations worldwide could also affect this business, because Nvidia is highly dependent on the world trade business relation and supply chain. That's why the fourth factor is the supply constraints and the bottlenecks that could form after any stress on the trade relations. We got basically the line, the diagram, right, with the chronicle line with everything. Blackwell ramp, hyperscale business with multi-gigabyte data centers, which is another point. The lack of energy could be another game changer, right, in this evolution of the company. Software expansion, China export rules. If either by United States, for any reason, they rise again, restrictions on the exportation for Nvidia. Don't forget that the CEO of Nvidia was mentioned that they could even grow better and further if Donald Trump didn't impose these sanctions against exportations for technology to China. But also from the other side, we also have been reading, and I sharing with you in the daily reports, financial daily reports we do in ATFX, the possibility that even China put restrictions on the importation of Nvidia products, which is another option. So that's why, in my eyes, I'm more afraid of a bearish scenario than a bullish scenario. That's the end of the conclusion of these fundamental aspects. I'm more afraid of bearish case than a bullish case. Why? Because the vulnerability of this sector at the moment, the last 2-3 months, is massive. We have seen how the indexes like Nasdaq has been doing lateral movements, and also we have seen how the paranoia from investors are rising about potential bubble in this sector. Now, the patterns in a technical analysis, we can see shoulder head shoulder figures, shoulder head shoulder pattern that is not really nice, because obviously it's showing us that if by any chance the price cannot break up over the shoulder line, it's gonna probably go to a correction. Now, if we take a look closely, you can see that actually the movement, it's inviting the price to a natural retracement to $170 per share, which still will be a normal and natural correction. The worst case, if the support in $170 is lost, if they fall below that levels, probably we'll see that the drop speed up and then go to $130, probably potential target. Still with $150 eventually in a support, but with a goal or a target in $130 per share, and worst case scenario $100. If the report is super good, it's beating expectation and the prices are going well, we can see the movement needs still break up the resistance of the shoulder line, which is about $195 to $200 per share. And still we got the resistance of the top high new records reached a few months ago in Nvidia, which is $211. That's my scenario, that's my vision. And again, remember, this is not advice of any kind. It's simply my vision on the company and why I believe it's more risky bear scenario than bullish scenario. I hope this is useful for you. And remember, if you like it, thumb up, and I see you in the next report. Bye-bye.